Hey everyone, welcome back to MSTR Daily. My name is Matt, and in this video, we are going to respond to some of the crazy responses that we have seen about Microstrategy over the last week. First, we're going to respond to Jason Calacanis from the All In podcast. Saylor and MSTR are living rent-free in his head right now, and then we're going to react to a clip from the Compound podcast. And I want to preface that I may come off as a little harsh in this video, but that's because these people have chosen to mock and bash Saylor and MSTR without doing the necessary homework. And you simply can't reason with these people. By mocking and memeing them, you actually help other people see the truth of the situation, and it gives them the freedom to think for themselves instead of believing what these people say at face value. So if you're new to the stock and you aren't sure what's going on, then you are totally welcome, and I encourage you to put in the time to understand the revolutionary strategy of utilizing your balance sheet to acquire Bitcoin to bring value to shareholders. Anything I say in this video is not aimed at you whatsoever. It is aimed at the bad faith actors who are simply displaying their own density and ignorance. But before we get into it, check out MSTR Pro, which is a paid group where I disclose and explain my personal MicroStrategy options portfolio. In the last MSTR Pro video, I explained what I would do if I was starting over with 100K. So if you want to see that, you can check it out with the link in the description. Okay, so a lot of things happened this last week. MicroStrategy briefly passed a $100 billion valuation, and everyone and their mom was coming out to give their opinion on the stock. One of those people was Jason Calacanis from the All In podcast, and I'm not sure why he decided to throw his hat in the ring, because it was clear that he had done about 8 minutes of research before quote tweeting everything Saylor posted and was getting absolutely ratioed in the replies. So let's take a look at what he said. He started with this. He's replying to a clip of Michael Saylor on CNBC last week when he was responding to the Citron short thesis. I commented on that clip in last week's video, so go check that out if you want to see it, but this is what he says. We borrow money and we buy Bitcoin, and Bitcoin can only go up, so we're all going to get rich, and you simply don't get it. And you can't buy Bitcoin yourself in your own wallet and have control over it and have no expenses. Oh wait. Now I will say, at least he is saying that you should have control over your own Bitcoin. I think that is immensely valuable, and you should not be 100% MSTR. Cold storage Bitcoin is the best, and when compared to the counterparty risks in the financial system, it is definitely a safer store of value. Now, Preston chimed in and said this. Yeah, let's make fun of the company that has outperformed Nvidia since 2020 instead of trying to actually understand his positioning and timing of buys, not to mention the best performing debt on the planet. Classic take as usual, Jason. And Jason responded with this. If Bitcoin goes to $1 million, he's a genius, and if it goes back down to 30 to 40K, what happens? And this is where I jumped in, because for some reason, everyone thinks that there's an impending margin call price where if Bitcoin goes down 50%, then MicroStrategy goes bankrupt and market dumps their 300,000 Bitcoin. But this couldn't be farther from the truth. The reality is that MicroStrategy's leverage position is relatively safe. As much as people want to tout that they are a leveraged Bitcoin play, they have the same amount of leverage as you owning a $1 million house with only a $250,000 mortgage on it. That's the position. Their debt usually fluctuates around 25% of their Bitcoin holdings, and none of it is posted as collateral on these bonds. Their Bitcoin is 100% unencumbered. So this is what I responded with. The stock goes down, obviously, but nothing more catastrophic than that. None of the Bitcoin is posted as collateral on the loans. And if people did an hour of research and learned about their capital structure, they would know that the risk is low. There's definitely still risk, a lot of risks, but it's not like they go bust if Bitcoin falls 50%. And if you want to see what happens in that scenario, go study 2022. You know, my favorite part of this post is that Saylor ratioed Jason by saying this. Since I am all in on Bitcoin, maybe you should invite me onto the podcast. I am sure an entertaining discussion would ensue. And then of course, Jason replies to everyone else except the chairman who got the most likes on his post. Nice, Jason. Jason kept digging his hole deeper and deeper, and I remember being told as a kid, when you find yourself in a hole, stop digging. But Jason has decided to do the opposite. Look at this post. Saylor tweeted about the Bitcoin yield for the quarter and the year to date, and once again, Jason quote tweeted him kind of mocking what he was saying, and then Saylor was being very charitable and responded with this. Bitcoin represents the digital transformation of capital, and MSTR is accelerating this process by issuing fixed income and equity securities backed by Bitcoin. The dynamics are quite interesting, but a responsible treatment of the topic requires more than 280 characters. You know, I personally thought this was a very good reply. He tried to give the 30,000 foot overview and then explained that there is more nuance involved like every other topic. But instead of replying, Jason quote tweeted him again and said this. It's too complicated to explain simply. Why does Saylor owe you a novel to explain what's happening with his company? You're posting this in bad faith and simply haven't put the time in to understand it. And he keeps on digging. Like right now, while I'm recording this, he is still accusing Saylor of trying to pump his own bags by encouraging other CEOs to add Bitcoin to the balance sheet. I'm not sure if Jason has some sort of weird savior complex going on right now, but this entire saga is simply embarrassing, and I'm going to be very excited to watch MSTR crush the returns of Uber over the next few decades. They should simply have Saylor onto the podcast to talk through what's happening and have an open and honest discussion where they choose to listen to what Saylor is saying and try to use their heads to understand what's going on. Okay, for the next hilarious clip of people showing how hard it is to get your brain to work, we have the podcast The Compound. I'm not surprised you haven't heard of them. One of the hosts is a frequent guest on CNBC, CNBC, and he recently had the clip where he called Bitcoin a trading vehicle and nothing more.
Still trying to figure out in his own mind, and many investors are out there thinking the same thing, the real use case is what?
The use case is this. Look, I'm sorry to step on your toes. This is the use case. It's people putting money into it, pulling money out of it, using it to buy other coins. That's it.
I think that's being very liberal with the term use case.
But anyways, if they don't understand Bitcoin, there's no way they understand MicroStrategy, and they're just showing their true stripes in this clip. Watch this.
The second point I make is, if you look at Microsoft, for example, 98.5% of the equity value of Microsoft is based on forward expectations of quarterly earnings. And 1.5% of the value of Microsoft is based upon tangible liquid assets. And another way to say it is Microsoft is 144 times levered to their quarterly earnings. If they earn $3 billion a quarter or X billion, whatever the number is a quarter, more than that, I guess, but you multiply it by 144x, right? And if they miss by $1 billion, it's 144 billion where you move. And the reason why operating companies are like that is because the SEC 33 Act and the SEC 40 Act required that operating companies hold no more than 40% of their liquid assets in securities. So normally they'd use treasury bills. And treasury bills, as we just showed on that chart, are toxic. It's toxic capital. It's poison. You might as well just inject poison into your veins, right?
Right. And of course, that is Michelle Obama. So that's Michael Saylor. He's got the hottest stock in the universe, if you could call it a stock. It's basically a repository of leveraged Bitcoin, and it's
three times the value of their
year.
Bitcoin.
That's right.
I don't know how to respond to that. Where Kevin will be okay. All right, let me
let it rip, Cliff. Let it rip.
Look at Kevin's laser eyes.
Cover your ears, Kevin.
I don't usually talk this way on classy podcasts like you, but that entire thing was the dumbest fucking thing I've ever heard.
Okay.
You know that meme
Billy
or
Madison?
that video where the guy goes, "What you just said here," and he goes through a long
Billy Madison.
I don't even know what it means. Companies are the present value of their future.
Can I ask you a question?
Cash flows.
This is non-Michael Saylor related, though. Can I ask you a bigger question?
Yeah.
This guy has arguably pulled off the greatest trade of the era so far.
Yeah.
His stock price is up 650% year to date. His market cap is now bigger than Starbucks, 100 billion a touch today. Does it matter if somebody gets it so right, even if their reasons are insane? To you, in your book, is there an asterisk next to the obvious thing he just pulled off?
It doesn't matter to his bank account.
Exactly.
Agree.
It does matter as to what lessons to learn going forward. Because on average, and I don't even have a very strong opinion on crypto. I'm not a guy who's done a deep dive on it. I have a natural old man cynicism that you creating money by burning oil doesn't seem.
It's a spectrum. I'm somewhere on the spectrum close to you, I think.
In this case, he won the lottery. It doesn't imply a rational action going forward. Do I bet on all lottery tickets now? Most lottery tickets collapse worthless. And on net, buying lottery tickets costs you money. So the lessons to be learned from one guy who won the lottery are close to zero.
Okay.
He's brilliant. And maybe Bitcoin is worth much more than I realized.
Let me run it.
Maybe he's a brilliant trader.
I honestly kind of love this clip. He says it's the dumbest thing he's ever heard, yet also admits that he doesn't understand what he heard. Sorry, my guy, but usually you want to reserve judgment for after you've taken the time to understand someone or something. The fact that you admit here that you jump to a negative conclusion without trying to understand shows that you are not intellectually honest, and I wouldn't want you near managing anyone's capital. And then he starts questioning the valuation model that Saylor lays out. Like, yes, Microsoft is not valued based on its balance sheet. It's valued based on its future cash flows. That should be obvious. Heck, have me on the podcast and I can lay out a DCF model or free cash flow valuation. What Saylor was trying to explain in the CNBC clip was that their Bitcoin yield is basically earnings. They are arbitraging the equity and debt markets to increase their Bitcoin per share, which is accretive to shareholders as earnings. And with all of the FUD and negative press MSTR has gotten over the last week, it only reassures me how much higher we have to go. If people don't understand what's happening, that's how we 100x. And with that, if you enjoyed the video, consider hitting the like button and check out MSTR Pro in the description below. Thanks for watching, and I'll see you in the next video.